The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, traders. Happy Wednesday. I can't believe it's already the middle of the week. It's already the hump. No market on Monday. It's flying. The volume is low. The market's just kind of meandering. We did not get our last Santa rally. No follow through. It seems to be coming with the decent inflationary report that came Friday before. I hope everybody had a wonderful Christmas, or Hanukkah, or Kwanzaa, or Festivus, whatever it is you celebrate. If you celebrate, I hope it was wonderful. Everybody was safe when traveled. I mean, the travel is nightmarish. I hear many horror stories as I peruse through my Facebook of people stuck in renting cars, and that doesn't seem much better with the weather the way it is. So I hope you're home. I hope you're safe. I hope you're happy. Raymond says, I just bought QQQ and SPY puts, fed up of the red. Yeah. Thank you, Phil. Wonderful Christmas here as well. Been able to spend some great time with my son who's back from college, my daughter, and get some family time in. It's been a wonderful thing. Hello, LK. Good to see you. Good afternoon, Phil. Good afternoon to you, Fred. Hello, Raymond. It's good to see everybody. Welcome to the Tradespoon live trading room. Stocks and options closing bell. Yes, closing today. Opening bell will be on Friday. I'll get to hang out with you guys, have morning coffee instead of afternoon coffee. Today's webinar is brought to you by 2023, the year. Sponsoring everything this week. It's all sponsored by the year 2023. It wants to come in with a bang. It's going to be a better trading year. I can feel it. It's coming. 2022 was not much of a trading year. A lot of struggles. You really had to fight and claw to get and stay on the right side of things. Always a bit frustrating when we have markets like that. So here's to hoping 2023 is better for trading. I have been trading now that we're getting closer to 2023. 2023 is my 20-year mark for teaching and 23 plus years for trading. Very excited. Very excited for that. Here's the disclosures. Keep remembering, as always, that trading is risky, and we need to make sure that we take that into consideration. All right. Let's get cracking. Market's down. Started flat. We started okay. Then we had a pretty heavy sell-off here in the morning. A bit of a recovery, but still down in the afternoon. However, and this is what's interesting, we're going to see what we think about the support levels because they're still holding. It's the same support. We're just kind of stuck in a range, and we're waiting to see what's going to bust us out of that range. So that's where we find ourselves. S&P down 0.7, Dow 0.58, NASDAQ 1.25, Russell 1.15. Oil is down a titch, gold is down a titch, silver down 1.5. The only thing up a little bit are bonds. Perfect storm. It's anyone's guess when Tesla will stop tanking. Well, if you take a quick peek, it's the best looking stock on the S&P 500. Who's this? Except for Generac Holdings, that's up 5.5%. Other than that, Tesla's up 3.5% today. That's pretty good. That's pretty good. That's a good day. We've got, let's go back. Let's just kind of peruse. I feel like we haven't, like last week we got to hang out every day. Now that it's been a couple of days, I feel like it's been forever. How's everyone doing? You guys doing all right? Any new trades to speak of? Apple stock faces major test that could turn quite bearish. I don't know what test that is. We've been talking about Apple as a leader to the downside. That's one of the most important struggles that we see happening in regards to the NASDAQ. The Russell's or the NASDAQ's Apple's been struggling for quite some time. We've been talking about that here. I feel like Yahoo's a little late to the game on that one. Fewer deals, higher prices, travel trends for 2023. Yeah, okay. What else? That's really it for news. We weren't expecting much. Let's go to the economic calendar. It's going to be an interesting week. Really not expecting much as of right now. New Year's. Oop, that's next week. That's next week. Here's this week. Christmas Day observed on Monday. Nothing there. The home price index dropped by 3%. Really not bad at all. The FHFA home price index actually stayed flat. This morning, we got home sales. We're expecting them to be down. These are pending home sales. We're expecting it to be down 1.8%, and it was actually down 4%. However, previous was 4.7. So at the end of the day, it's in line with expectations. The jobless claims will come out tomorrow. Again, we've been talking about this because this is where I would expect to find any early signs of weakness in the labor market would come from jobless claims. But I'm not even going to blink at it until it gets above 250. And between 250 and 275, it would have to be multiple weeks in a row, or it would have to get up above like 280. The high 200s, then I'd be like, oh, something's happening here. Something more sustainably indicative of weakness within the labor market. But until that happens, if we keep seeing low 200s, that is par for the course in a full labor market economy. So nothing concerning. Chicago PMI really is not much of a report. The first week of January, can't believe it's 2023. Can you believe it? I mean, it's crazy to think that the pandemic started in 2020, right? Early 2020. We're about to be 2023. It's been 3 years since we first, now of course we got wind of things starting 3 years ago. That's it's crazy to think that we've been through all that, and yet here we are, ready for 2023. Still battling inflation, still battling supply chain issues. Yeah, here we go. Let's get ready for it, right? Let's get ready for it. I can't believe that Friday, I think Vlad is going to be there in the afternoon, but Friday will be my last webinar of 2022. All right, very exciting. Next week, what do we have? A lot more data, a lot more information coming out. Manufacturing, FOMC minutes. We've got employment numbers. We've got, we've got a pretty good amount of stuff coming out next week that might help give us a little bit more direction overall. But I guess we'll see what happens. Okay, let's see how Stella sees things. She was pretty neutral. And here's what's interesting. A lot of times when a prediction doesn't come, a new prediction will start coming. But this is very similar to what we saw, which is bear flag territory, right? We back here, we thought it might be bear flag and then it drops, but it wasn't. It just sort of grinds along on this support level, clearly a support level there. But it's still calling for the same thing, the model is. It's still calling for a slight uptick and then rolling over to the downside. Who said they bought puts today? Raymond. I don't disagree with that. We're going to take a look at the VIX to see if there's any confirmation there. But that's certainly something we've been talking about being ready for, right? Is if this thing starts to turn around, you've got to be ready to go the other way, because if you're not early, you're late. That's basically how puts work, right? That's the problem of the down market. Looking backwards at a down market, you're like, oh, I can trade to the downside. The problem is if you're not early, you're late. You have to pick one or the other. It's very hard to just be right on time for some kind of a bearish forecast, right? That's why I'll put hedges on and sit on them. I put 2.5 hedges on, took profit on half of the first one, then the other half. That worked out great because there's nothing worse for hedging than the market going sideways for a week. That just is, you're just bleeding from time decay on something like that. So you got to have a plan for how you're going to go about it. But the model's still showing that bear flag uptick for a couple of days. If it doesn't get very far, looking for this to drop to the other side. Let's look at the other markets and see if they look similarly. Here's QQQ. Okay, QQQ is showing 4.5%, more bearish. More bearish, no uptick. That's certainly being driven by Apple. If I were to pull Apple up here, I imagine it would look very, very similarly. And there you go. Very similar indeed. Let's take a look at the DIA. Okay, let me see if I can get this to come up. Everything seems to be running a little slow over here for some reason. It's the Christmas break sluggishness. All right. Very similar to the SPY, like normal, where it's looking for maybe a bit of an uptick, followed by the drop. I'd say the Dow looks mostly neutral. And let's take a look at the IWM. Let's get rid of this. And let's go in here and IWM. Okay. Bearish across the board. The model is not seeing anything great. Here we are getting close to the end. Normally around the 15th, 16th, 17th or so, even going to the 20th, we start to tick up. And it looked like it wanted to. Zoom in here. It looked like we wanted to for just a minute, and then it just couldn't do it. Okay, now what? Well, let me start this over. What would we typically expect to see in January? A lot of sideways. A lot of sideways. So January is where things a lot of times work themselves out. This January, when we talk about what happened in this ugly 2022, it was kind of nasty and things started falling and got bearish. Hopefully we see this sideways. If we can grind it out sideways, then maybe we can get some expectations for the spring bull rally, which we tend to see. That spring rally tends to come February, March, and April. Ideally, that's what we're hoping for. But we're gonna trade what we see. If we don't see it, we won't expect it. This is what it would look like to start with. We already looked at the map. Tesla, oh gosh, Tesla was up 3.5%. Looks like things are getting worse into the day. Let me see if I can refresh this thing. Now it's only down to 1.5%. A little bit of bank bullishness. We've got some green down here. Bank of America, Wells Fargo, Citi, JP Morgan. Energy is the worst, really kind of nasty. Technology not too far behind. Yeah, what does this tell us? More of the same. Be careful. Be careful. We did put a trade on. Put a trade on RTX. It's down ever so slightly. Let's take a look at that. Yeah, you can kind of see it's if it doesn't go soon, it tried. It's trying. You can see the stochastics has moved up. It's tried. It just hasn't gotten anywhere yet. We were looking for this thing to get through here and try to get up towards 105, make another. But you can see the same thing. It can go sideways, 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 and then go. Right? So I'm going to give this a little bit more room. But by Friday, if it hasn't moved, then I'm going to shut her down. Okay, so that's really the only thing that with me we've put on here recently. Any new trades with Vlad? Let me know if there are any. Let's just let's go finish up in here and see if there's anything else we need to be aware of. I'm going to hold off on the sector rotation till the last 10 minutes. Let's get through the watch list and see if there's any trades to speak of, what we see that we like or don't like, and what we're going to do as a result. Let's get in. Oh, no. I'm sorry. First things first, we got to do a quiz. We can't not do a quiz. Okay, SPY. Oh, yeah, the selling is putting it right up against. You can see that here on this day, the 22nd, that was last Wednesday, I believe. No. Last Thursday, we touched down at 375. I'm still looking at this level holding, but you can see today we're really stretched. We're really stretched at this level here. Doesn't look great. And if we look at the VIX, We'll see what the VIX tells us about what's going on here. Well, I'll tell you, the VIX is tough right now. So we did get a lower low here. We've got, then we went up and we've come down and we seem to be turning. Yeah, I'm going to call that a higher low. I'm going to call that a higher low. I'm going to put a new hedge on and we'll do it together so you can kind of see what that looks like. So Raymond, I agree with your decision. And it's not just a higher low. You could also make the argument that this is the line of consolidation that we drew last week. Whoops, not that last piece. I can't erase only one. Can I? Let me see. Erase all drawings. Yeah, see. Forget that last line. But if you notice that line of consolidation, we seem to be kind of breaking above it right now. So the VIX it's a bit of a choppiness about it. This was where the first hedge came, then put a half a hedge on here, then put another full hedge on here, and then we've just been kind of riding it out. It hasn't really been doing much. So for me, the fact that, I mean, honestly, you could have looked at yesterday theoretically because we went up to here and then we went down and then we came up. But we didn't close above the body. However, now we're closing above the previous body. And that's enough for me to say, yes, that looks a bit concerning right there. That is definitely a bit concerning. Okay, so yeah, you know what? Let's just dive into it, right? Let's just dive into it. What am I looking for? I'm going to go out 5 weeks. I'm going to go 5 weeks from Friday. So the 30th, that puts me the 6th, 13, 20, 27, 3rd, February 3rd. And I'm going to go, oh, I didn't set the levels. You're right. All right, let's do that. I'm a little scatterbrained today. All right, I'm going to go from this low here. That's C. And then I'm going to go right across this bottom level here. That's B. That's A. And then we're going to look at the hedge. And then we're going to look at our watch list, which is full of red. All full of red. So 377.40 and below. 378 40, we'll call it. 377.40 by 378.40. There's your B. Above that is your an A. Below that is a C. There's a dollar range. Give it to me. Dennis is a C. LK is a C. Koo is a B. I think we'll bounce. But I don't think we're going to get a lot back. I'm going to join Koo. I'm a B. Raymond is a C. Jacques is the bull of the day. He says it's going to recover back into the A territory. I mean, recovering into A territory is still down 0.7%. Keep that in mind. It's not that much of a recovery. All right. Kent is a C. Anybody else? There's not many chances to win 2022 gold medals anymore. They're going to be a collector's item soon. So if you want one, you got to get it now. The only way to get it is to earn it. Anybody else? All right. All right. Don't forget the 40s. 377.40 by 378.40. Okay. Let's go talk about a hedge. We'll start setting it up. We'll still go through the watch list. But the other thing I'm going to do is I'm going to go 5% out of the money. So let me go in. And I'm good. It doesn't have to necessarily be right here. I'm good to kind of come in at this level. I mean, we'll call it maybe 380. So let me get my calculator out here. And let's say 380 times 0.95, 361 strike. So let's just see. The VIX hasn't gone terrible yet. The VIX has not gone terribly yet. Let's go into SPY. We're going to go to February 3rd. It's about 5 weeks and change. I'm going to make this back to single. And even there, you can see we said 361. I'm going to go 360. I'd rather go with the round number. 417. 417. Now, I don't like risking more than about half. Problem is, how you do these. If you were going to try to get where you could do at least 2 to scale out, or even 3, your risk is going to be more than what we normally do here. Now, a lot of you may have risk levels more than what we normally would do here. You could consider going another 10 points out of the money. That gets it down to $2.30. That's not that big of a deal, to be perfectly honest with you. And if it gives you the ability to control your risk better, I'm going to do that here. Let me see what these are trading for. I'm going to do 3 of these. SPY, February 3rd. The 360 ones. Now, personally, I would go with the 360 ones, and then I would try to position size it for at least 2, if not 3, and then understand what that risk level indicates, right? But if you're trying not to risk more than $200-300, you don't want to do a $450 option. It's just not going, and risk half of it. It's just not going to work. And you might be able to risk less than that, but if you go to the 350 ones, 10 extra points, that's actually, I'm showing a 251 live price. Then you'd be able to do 2, maybe 3 of these. I'm going to go with 2 here in order to get those on. Let me know if you have any questions about that. But that's it. Now, if we look at this now, I would lose half of this trade. This is going to cost about $500. I would lose half of this trade around 386. Or if I held it for a week, let's go 1 week out. Not a year out, just a week out. We'll go to June 4th or January 4th. Let's see what this does for us. Okay. The fourth 250 exists about 381. It's not a lot of room. You can see, right? You can see that's not a lot of room to hang on to it for a week. It's easy for these things to lose a little bit more. So you want to be very careful with your position sizing on something like this. Yeah, I'm going to go ahead and put this on. I'm going to put it at 250 and see if we get hit. I'm actually showing it's around 252. Well, that got a favorable fill. Let me see if I get that live. What did that fill at? Did it say 236? All right, I'm going to see if I get that live. That seems like a favorable fill, to be honest. Anybody else trying to get it? Let me know if you get an actual price on that. 230. I'm going to put 238. Yeah, I don't think you'll get that. I think 250 is maybe the best you'll get. I'm going to leave it at 238, see what happens. See if we get that hedge on. Got a few extra pennies there that the live platform maybe would not be giving, perfectly honestly. All right, now let's go through. We got the quiz in. We talked about the hedge. We got the hedge on. Let's go. Let's go through the watch list. Alcoa. Well, I'll tell you what. Looks like it's putting in a lower high right here, holding resistance at 45. What was the hedge? It was a 250 strike. No, 350 strike. I'll show you again. February 3rd, 350 put. Alcoa, lower low, lower high, looking bearish. Apple, let's be honest. Apple actually was looking bearish here. Went up, lower high. Now we're down 3% today, and the volume is upticking. This is pretty big volume. We talked about volume. Let's look at that for a second. I said it would be about 50%. Average has been 85, and we've been seeing 60, 51, 51. So that's about 55, 60%. It's just not much there. ADI still coming down. ADM rolling over. Pretty fast and hard. AMD new lows. Amazon new lows. AXP rolling over. Looking bearish. Boeing's actually holding on. Boeing was one that I put on. Did okay on it. Got most of it off here. The rest of it early here. Now it's possibly ready to turn again. So I'm going to keep an eye on Boeing. The Chinese stocks tried to show something, but haven't been able to show any follow through. So still kind of holding off on those. Caterpillar still looks, industrials is about the only thing holding up, led by Boeing, Caterpillar, John Deere, even RTX, right? Oil has broken the consolidation. There's the consolidation line. We broke it. Now it's kind of overbought. So if oil comes back, if ConocoPhillips comes back to 110, this thing comes down here and turns. That's a go signal for me. I'll definitely look at that. I do think energy is starting to kick back up again. Natural gas is one I've been looking at, looking to see if oil is going to recover. It has. That's definitely one I'm looking at. Costco, if you're feeling more bearish, these are bearish looking signals right here. We went down, lower low, we came up, lower high, and now it's rolling again. Very similar to these first 2 days here. You can see this looks like it's turning for a cross. Definitely looks negative. So if you're thinking to yourself, man, I feel bearish, Scott, then trade bearishly. Nothing wrong with that. Then absolutely trade bearishly. DBC is kind of flat. John Deere kind of flat. The Dow is rolling over. Disney rolling over, looking bearish, looking like it's selling off. FCX. FCX wanted to try to go, and it just kind of failed to launch here. If you had taken the trade, I'd recommend closing it. It just doesn't look like it's going anywhere. FDX not really going anywhere. China stocks not really going anywhere. Here's gold. It was bullish for a while, but now for the last month, it's stuck in this range. Goldman, nothing there. GSK, so pharmaceuticals, healthcare has shown a bit of resilience. We'll go through here in a few minutes the sector rotation to see what sectors we think are poised to lead us into 2023. We have to be open to the fact that the sector rotation has been quite defensive lately, which has led us to be a little bit more bearish overall. IBM sold off, lower low, tried to recover, and looks like it's rolling over, possibly ready for another move down. IWM looks like it's moving on another leg down. Jets. Further down, Eli Lilly, sideways at best. MasterCard. MasterCard was one we were looking at, saying maybe. It actually gave a bit of a signal right here. Same thing. If you took it, be ready to fail fast, fail cheap if possible, right? This is not what you were looking for right here. Meta, sideways. So you can see so far what we have is a few things holding up, mostly in industrials and in healthcare. Everything else is kind of giving it back a little bit. Merck looks okay, but giving it back. Marvell, new lows. Microsoft wanted to try, and it just couldn't. It couldn't lead the way. It's getting pulled down. The entire tech sector being pulled down. Netflix gave it a shot, turned, couldn't, failed to launch, rolled over. Anything bullish, remember our time frames, was literally 2 to 4 days. 2 to 4 days for it to work, which means 1 to 2 days for it not to work. You've got to make sure that your overall time frame expectations are 100% dictated and in line with what we see from the market itself. NVIDIA, new lows, couldn't hang on. It wanted to try, and it just couldn't do it. The tide is falling, and everything is getting pulled with it. QQQ, new lows. Starbucks, a bit of stability. Silver, sideways. Semiconductors, new lows. Spiders, trying to hold on. Toll Brothers was strong down to, I mean, everything's just getting pulled down. Tesla, we said we thought it would get to 100 before it got back to 200, and that was back in here. You can see it rolled over and it's just been kind of grinding it out. Here's what something like this looks like on a Heiken Ashley. Look at that. Just dropping. It's a lot of equity lost from this 314 level. Split adjusted, of course, right? That was the 3-for-1 split, came back here. So it was trading up near 900 back then. You got 3-to-1, and it's literally a third of its value of the highs. That's a lot. That's a lot to give back. UNG. I thought UNG was going to try to do something. Yeah, Raymond, right? I got to tell you. Comment about Elon Musk not being quite as good as he seems to think he is. The whole Twitter thing. And he's like, oh, I'm just going to come in and demand people work long hours and blah, blah. And they're all like, oh, yeah, no, we'll just walk. We'll just walk. And then he has these ideas and he launches it and then realizes what a bad idea it was. It's really quite funny to watch. Somebody who really thinks he knows more than the rest of us comes in and just can't make anything happen. That is a big old slice of humble pie, I have to imagine. Still has plenty of money, though, I would imagine, right? Sold $40 billion worth of stock earlier, so. Visa. Yeah, Visa and MasterCard are kind of trying to hang on, but, you know, financials is an interesting thing. Here's the VIX, still showing that same kind of a signal. Financials down, industrials. We have a few that look pretty good, but the rest of them don't look. Everything is just kind of rolling over, establishing new lower highs. From a technical standpoint, from a short-term technical standpoint, looking at daily charts, this is a real nasty day. Very nasty day. Where are those puts trading now? 257. Okay. Okay, so they didn't get that filled, but they got somewhat close to that. Let's do a quick sector rotation and see what we think about who's leading and who's lagging. So there's energy from a 200 day, which is about 9 months. That looks fairly bullish, but if you look at who's next, staples and healthcare, utilities, industrials, materials, then all your growth sectors are down here. Financials, technology, discretionary, communication services. It's all down here at the bottom. $133 days. What do we see? Energy starting to move back into a leadership position. Industrial staying strong. Healthcare staying strong. Financials is okay. Utilities. So it's like the only growth sector that's tried to hang out at the top is financials. Technology, discretionary, and communication services, they're trash. They're just in the tank right now. There's no viability to those, and that's why we haven't been doing much there, right? We've been doing mostly industrials, a little bit of financials, and then we've started looking more at utilities and staples. When we jump down to 66 days, what do we see? Energy, industrials, materials, same, right? Which is why I'm looking at ConocoPhillips or natural gas to show some kind of you know, leadership. XLE. Let's take a look. That's worth a look, I would say, for sure. As an energy purveyor, energy play. Yeah, I mean, right now it looks a little bit overbought and coming down, but if it holds support at or above 83, I think XLE is absolutely a viable play. Okay, let's take a look at 22 days, just the last month. What do we see in just the last month? And it's all defensive in the last month, right? The only thing holding positive is utilities. If I can get it to show up. There's oh, come on. Utilities. The next two closest things would be healthcare and staples. Again, think about it in this terms. Is it what you want or what you need? I need utilities. I need to turn the lights on. I need to turn the heat on. I need healthcare. I need medicine. I need to go to my doctor. I need staples, toilet paper, food, toothpaste, etc. I don't necessarily need industrials. So industrials is the only one that's kind of hanging around. You can see here, I need energy. Energy is shooting back up. Materials holding, but if you look at all the growth sectors, communication services under the S&P, financials under the S&P, technology way under, discretionary even more so. So from this perspective here, the most growth-oriented tech and discretionary are the worst performing. So if you're thinking about capitalizing to the downside, where would you be looking to trade bearishly? I would say I would be looking to trade bearishly in discretionary and technology. Those are the two, discretionary and technology, leading the way down. Take your pick. If this thing continues to move bearishly, yeah, we're going to be in some trouble. So what am I going to be looking for? Let's take a look at the VIX again. We'll wrap it up there. Let me know if you have any questions. I'm looking to see if this thing gets back up to, like, let's say 25. Okay. If we get back up to 25 or even worse, higher than 25. The only thing that's going to bring a spring rally is if we see it come back down, go up, not get to the old high. So there's a high. Then we would need a lower high here. That. If I see that, then I'm going to be most interested in what sectors are trying to lead in that last couple of weeks, in that lead up. And there might be some bullishness. If this is all I saw was this VIX, I wouldn't look at this and be like, man, this market looks terrible. The market looks worse than the VIX does. Filled at 238. Oh, you got it at 238. Okay, excellent. The best I got was 240, if anyone is curious. I worked a little bit to try to get it. But there you go, 238. Good job. The market looks worse than the story the VIX tells me. And so that tells me that there's still some hope that this thing is going to be short-lived. As of right now, the one thing I don't see is the institutions panicking or rushing to build some hedges in their portfolio. We're in the low 20s. That's pretty reasonable. Knowing that the VIX really, if you look at the VIX since the pandemic, I'll finish with this. If you look at the VIX since the pandemic, Let's go 3 years. And let's go daily. The lowest it got was this back here in 2021. It was sitting around like 15 to 23, and then since December of last year, we really don't get below 18, and it's 18 to mid 30s, right? We haven't seen this. Look at this right before the pandemic. This is back in February of 2020. 12. That was 12. We haven't seen it below 16, basically. And so if things are getting ugly, it doesn't show it here yet. Now, could it ramp up like it did there, where all of a sudden it did come? Yes. But for now, I'm still thinking that we may work around and see what happens, what comes, and then ultimately what we want to do with it. So there it is. It looks more bearish than not right now. There is not a lot of good prospects out there bullishly. I'm not interested in trading bullishly on defensive areas. If I see the market looking to bounce and then I'm going to trade bullishly, then I would do it in something like healthcare, something like pharmaceuticals, staples. I will look to trade energy bullishly. But as of right now, until I see a very convincing set of circumstances that include higher high, higher low on the market, lower low, lower high on the VIX, I think we're in for some rough early 2023. Okay, great. Batten down the hatches. Be ready. Be ready with your bearish trades if you're more bearish. Be ready with what kinds of bullish trades you might think about if things start to recover. Have a plan, stick to the plan, manage your risk, and we will be fine. Okay, let's see who wins. Let's see who wins. Let's get this back to SPY. I think the C's maybe have it. Let's get this back to 5 days, 5 minutes. Oh, yeah. I think we were at 377.40. We're down here at 377 even. C's, you win the second to last gold medal of 2022. It's valuable. It's not as valuable as the last one. Oh, there is no last one because we're on Monday. We're Friday morning. That's it. The last gold medal of 2022. C's, you won it. Oh, I would have loved to have had one of those. I was a B. I didn't get it. A's and B's, sorry. We'll try harder next year. But for now, I will see you guys Friday morning. Bright and early, opening bell. And we will continue to make sense of this market and see what we think. Have a wonderful rest of your day. Be safe. Enjoy the week. Get ready for the new year. We'll all do a market dance on New Year's Eve to try to usher in a better 2023. But as always, happy trading.